Mr. Chairman, members, John Norwood, on behalf of the Independent Insurance Agents and Brokers of California. We believe this bill is going to allow insurers to be more responsive to market conditions and that ultimately that benefits consumers. The way we view this bill is that if you're an insurer and you have a rate approved by the Department of Insurance and you've complied with all the department rating factors, etc., that you ought to be able to cut that rate if you want to. We don't view this bill as a way, and I doubt that Senator's intent to allow insurance companies to go around the approved rating factors or somehow sneak other things into a rate reduction. We just merely see it as a way for companies to be responsive, and I think we should want those companies to be responsive. Insurers, like almost any other business, especially publicly held businesses, which most insurers are, want to grow. Their goal is not to tread water. So it's kind of all the years I've watched this, insurers they all think they have a better mousetrap, or they try to find a particular niche, or they decide they're going to do better claims handling to lower costs. Or they decide that I'm just going to get market share by cutting my price and cutting our price and increasing commissions. Now we like that commission increase part of that deal. They essentially go try to buy market share, and so we think that's a good thing. The concern seems to be with this bill that this might result in companies having either excessive rates or inadequate rates. They're kind of both sides of it. The argument on the excessive rates will be that, a company maybe decides to cut their rate 7%, but if you really went through this long process, you might get them, it might be appropriate to be 10 or 12%. Well, rating and pricing is not an absolute science in the insurance business, and I don't think it's all that bad to allow a company to try a certain thing and see what the result is. And yeah, if that may be the case, maybe they could have gone further. But if you have that flexibility and more insurers are doing that and incorporating that, it's likely that overall consumers will benefit. Kind of the other side of that argument is that, as I said, that companies are going to have inadequate rates. That companies will set rates that are going to drive themselves into insolvency, and that it's one of the number one obligations or responsibilities of a regulator to regulate solvency, and that's true. It is one of the prime tenets of the insurance code is to regulate solvency. It's also true that California has the largest number of insolvencies in the last 2 decades of any other state in the union. Now, it's true that most of those were workers' compensation, and there wasn't a prior approval theme there, but there's nothing in the insurance code that requires prior approval to have a responsibility for regulating insolvency. So it's the basic fact, and again, just like John, I'm not pointing fingers at anybody. Elected commissioners basically don't want to, primarily don't want prices to increase. They're not usually about trying to increase prices because they're concerned about, companies not charging an adequate rate. Lastly, the argument is that this bill is unconstitutional, and I guess I would just say that the purpose of Proposition 103 was to lower rates. I think this lowers rates, and as a member of the legislature told me some 30 years ago, well, John, the legislature always does unconstitutional things. That's not our job. We leave that, whether it's constitutional or not, we leave to the courts. And that's been the case with 6 or 8 different amendments of Proposition 103 in the legislature. So I guess from that standpoint, you can always let the courts do their job. So for those reasons, we urge your aye vote on this bill.
Thank you very much.